Question: if you had to retire today, do you have enough? That's when many of us start thinking about all that hidden money that leaked out of our wallets. For example, taxes. Yes, most of us have to pay, but can we better control how much we're paying, if anything, so we can save more for retirement? Our first guest says yes. John Neyland is the CEO of JCN Financial and Tax Advisory Group, a Houston area firm that focuses on preparing people for a successful retirement. Good morning, John.
Good morning. How you doing?
Good. All right. Before we start rocking and rolling, you have to say good morning to a very special lady in Galveston.
Oh, I'm glad you asked. My baby girl, Olivia Grace.
All right. Good morning, Olivia. Okay. About 20 years ago, you watched your mother-in-law go through something at a very vulnerable time in her life. She was losing money with her investment firm. And so when she went in to check on it, you say she was not treated with respect, which is the reason why you have such great passion for helping people discover their wealth.
Yeah, I was a contractor at the time, and she had been bemoaning her investment. She'd been with it for 10 years or so. And eventually one day she asked me to go with her to see a person, which I thought was a waste of time because I told her what I thought to do. I knew nothing about investments. And I was just really taken aback. At the first time I met him, I introduced myself and I said, I'm mother-in-law June here, and she's lost a fortune and doesn't need to lose any more. And then he said, don't worry, John, it always comes back. He repeated that phrase 2 more times, and the third time he did it, I literally hit my fist down on the table. The coffee spilled over. I said, we're out of here. And I walked outside with June and said, good gosh, I wonder if anybody else is in the same shoes as you. And I went into business that month 20 years ago.
Wow. Yes. And a lot of us are in that position because we don't really understand how money works. So you help to educate us. But I want to point out that you're not commission driven, there's no products. But what you want to do is make sure people understand how money is handled. For example, there is a difference between a tax preparer and a tax planner.
Oh, quite a difference. My father was an accountant, and he put it this way. He said that as a tax preparer, what he does is look in the rearview mirror, and he'll survey and take account of all the financial transactions that took place the year before and assimilate those to get those on the return. But he didn't generate any credits or deductions. So the planner looks over the front, out the front windshield, looks at the current tax laws and determines what fits their client and makes recommendations, providing greater deductions and lower tax liability for the clients.
Yeah, and I love when you say current tax laws, because it's always changing. You always have your eye on that.
Oh, it's a bevy of change. I think most people I visit with are aware of that, and it's going to come down pretty soon. In this business, I think in all of life, it's really good not to be in a position of being reactive. So we want to be proactive, but you cannot do that without having intellectual capital and the knowledge of really what the rules are.
Yeah. You know, a lot of us look at wealthy people and say, I wonder how they got so wealthy. There are some things that are tangible that we can look at, some invention they made or whatever. But the other thing is the wealthy focus on tax planning.
Well, interesting note, Nick, I saw this so recently. Last year, 61% of our country's residents paid no taxes. 39% did. And counts that to this: if you have $1 million or more net worth, you're in the top 5% nationwide. So wealthy people's single biggest objective each year is tax planning. Now, the long and short of it is this: tax planning, you can do that, but it doesn't do it on its own. It's got to be part of a really a formal plan to do so, because I will meet people occasionally that will come in that have done some things, but they just, maybe they bought a Roth IRA, or maybe they converted money. They didn't have a plan and process to that. And what you will find is there's a good, better, and best way, which is making decisions, and they're all mathematical in nature. They're not an emotion-driven decision.
Yeah, and the reason why it's so important for us to pay attention now, probably more than ever before, is because Middle America has a tax train coming at us. We're not on that train. It's coming right at us.
Boy, I like that analogy. You sure do. Well, stop and think about Middle America. You know where most of their money is in a retirement plan that is the highest taxed account in the land. It's got very specific rules that are binding. For instance, at 72, you may have saved a large amount of money and you may not have spent that money. I find it to be very true. Many of my clientele aren't spending enough. And at 72, they must take a distribution out of that account, pay tax on it. And at that point in time, if you've heard about a Roth, you're too late, because you can't take that money that you're forced to take out pay tax on, you cannot put that into a tax-free Roth.
Okay, so how do we lessen the retirement tax liability?
No, it gets back to the same old thing. It's a plan. You need a written plan to do this. And here's what it can do, particularly those with large IRAs. You can convert dollars that are in the highest tax rate possible to a tax-free account. And when you do that, you also reduce your taxes long-term throughout retirement because you may reduce or eliminate forced taxable distributions out of that IRA account. So kind of think about it like this. You may have had a plan to save money, and that's great. But if you don't have an exit strategy for your IRA, the IRS does.
Yeah. All right. When it comes to spending our money, you have this kind of example here. Like, when does a $50,000 car become a $65,000 car?
Exactly. Think about it. You go buy a car or any large purchase, you've got to pay the dealership for the car. But if it's out of an IRA, you're going to pay $50,000 for the car, another $15,000 for taxes. So what that does is this: it's not just that you spent more money, you increased your risk. And the number one concern of consumers across this land is run out of money. So when that money comes out of your account, it doesn't matter whether it's going to the dealership or taxes, your account sees it as a loss. So what if instead of paying $50,000 for the car and $15,000 for the taxes, you just paid $50,000 for the car? You reduce the amount you pay and reduce your risk. However, these things aren't like a stock or a bond or some investment you go buy. This is a planning tool. And it just will not happen without you making this happen and having a disciplined plan.
Yeah. Again, combining your tax and your income planning, because that way your dollar buys more. And that makes total sense, because when you say to people what's one of their biggest fears as they approach retirement, what do they say? I'm afraid I'm going to run out.
And here's the thing. The average person watching this program is losing money in a way they're completely unaware of. They look at their balance and maybe going up every year. But income planning is one of the most overlooked aspects. I would say I've done in the last 15 years over 1,700 plans.
Yeah.
And I would say that in probably 1,600 of those plans, the biggest mistake was income planning. Here's what I mean. You may have a stock, a bond, cash, gold, variety of investments. But there's never thought to where, which one should I liquidate first for income? You just tell your brokerage firm, I need this much money. One thing when I do my plans, I show my clientele, without changing anything, sometimes you can have more money just by having an efficient distribution analysis. You don't get that type of thing from a commissioned salesperson or a broker. I'm a fiduciary, so we charge a fee for service. We do our planning and advice, and it takes some time to get that. But any dollar you save in these manners is good because it takes zero risk, and you keep all you save.
We need you to plug those holes in our wallet. John, thank you very much.
Thank you.
All right. If you're looking to make sure you have a proper tax strategy for retirement, John has a great offer just for Great Day viewers. The first 5 callers with a portfolio of $500,000 or more, he's offering a complimentary retirement plan. This will allow John and his team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps for a successful retirement. It's a game plan to get you where you need to be. The number to call is 832-345-9300. Again, it's 832-345-9300.